Good morning, everybody. I'll start with a disclaimer. I'm representing the PSST, but I'm not the acting PSST today. I'm representing him. Thank you. It's a great honor to welcome you all to this annual review meeting of the Private Sector Development Program, the final under the third National Development Plan. The goal of the National Development Plan 3 was to increase household incomes and improve the quality of life of Ugandans. In support of the NDP 3, the PSD program aimed to increase the competitiveness of the private sector to drive sustainable inclusive growth. Because of the central role of the PSD program to the implementation of the National Development Plan, we extended invitations to a wide range of stakeholders to discuss the PSD program performance under the National Development Plan 3. In particular, I wish to recognize and welcome members of the private sector who have joined in their individual capacity and those representing various associations. I also wish to welcome in a special way development partners and civil society representatives that have continued to extend technical and financial support, and with whom we have continued to engage on strategic issues concerning the implementation of the PSD program over the past 5 years. In January 2025, Parliament approved the fourth National Development Plan, which was later in March signed by HE the President. This was a key milestone in our development journey, and I applaud the NPA for leading us through this process. This review gives us the opportunity to jointly reflect on the implementation of the PSD program over the past 5 years and to consider changes and improvements as we embark on the implementation of the NDP 4. The PSD program under the NDP 3 was a very innovative idea. It created a mechanism which recognized the critical role of the private sector and, in a special way, committed government to support private sector growth in a much more comprehensive and coordinated fashion. Under this mechanism, government institutions with associated private sector responsibilities worked jointly under one program with a specific goal to increase private sector competitiveness to drive sustainable inclusive growth. The 5 PSD program objectives to which a number of institutions here present contributed are: 1, sustainably lowering the cost of doing business; 2, strengthening the organizational and institutional capacity of the private sector to drive growth; 3, promoting local content in public programs; 4, strengthening the role of government in unlocking investment in strategic economic sectors; and 5, strengthening the enabling environment and enforcement of standards. As you will see in the presentations and discussions of the PSD program annual performance report, there are areas which have made very good progress, but there are also areas where our performance has been minimal. For example, while non-commercial lending to key growth sectors reached 4% of GDP from 1.5% of GDP in financial year 2018-19, The contribution of the informal sector to GDP increased to 54.75 from 51% over the same period. While this would appear fairly satisfactory, I believe we needed to do more given the significance of private sector performance in our development roadmap. The performance over the past 5 years, however, needs to be placed in proper context. The NDP implementation suffered from the effects of COVID-19 pandemic and the global economy in turmoil due to a series of geopolitical conflicts and other factors. These factors had major impacts and in many ways reversed many of our gains over the years. Many small and medium-sized enterprises closed or failed to grow. Our ability to address many of the key constraints, such as lowering the cost of credit, was also greatly curtailed. We are taking measures to address the impacts of these factors, but the effects still linger on. We have now closed the NDP 3 and have embarked on the implementation of the NDP 4. Formalization remains a thorny issue, even as we turn this page in our development program. Accordingly, the theme of this annual review is selected to guide us as we move ahead. Let us build on lessons from the NDP 3 to strengthen formalization under NDP 4. I implore you in this review meeting to reflect on the program experiences and lessons under NDP 3 and to carefully consider the adjustments needed to improve our effectiveness in ensuring that the PSD program performance is better under the NDP 4.
We are happy to have you. Thank you for honoring this invitation. While we were praying, the sentence that stood out for me was candid evaluation of ourselves. The years I have worked, very few years, I have learned that when we are reporting, it's not for humiliation, but it's for identifying areas to strengthen or to do differently. So it's in that respect that we will look at our performance. I have summarized it because they gave me 15 to 20 minutes for us to be here. But I wish to confidently say that we shared the report with the emails that we received. So my presentation this morning is going to consider the introduction and background, part of which I have done. We are going to look at the highlights of the performance, going by the 4 high-level key result areas that we have been marked against. We are going to look at a little performance at objective level. The objectives are lower than the outcomes, and into that I will look at a few outcomes. I'll make mention of a few interventions, and with every intervention it will be possible for us to identify which agencies we have been working with. In my slides, I'm not going to mention our partner agencies because that is in the broad report which we shared. And then I will briefly go through the emerging issues. The emerging issues I identify here are about 30% of what the report carries. So if you have the report, it's not that we were not able to identify the other emerging issues. I wanted us to see the numbers on this one. So in the introduction and background, I think that if we were to mention one problem statement, thank you. One problem statement about why we are here is the competitiveness of our economy.
So this presentation is going to draw upon this literature review that I've worked on with co-editors Matteo Boba, Luciga Dan, and Maria Flavia Harari. Yeah, this is a Vox Dev Lit that basically does a survey of the whole of the literature on informality and main lessons, and this is aimed at a broader audience, exactly to foster discussions on policy making. So I'm going to draw upon this in conjunction with this report on the diagnosis of the informal sector in Uganda to try and provide a useful analysis in terms of looking forward what would be the best policies to address informality in Uganda. So let me start with a broad motivation. Perhaps I don't have to do this here because that's one of the main drivers of this discussion. But why should countries tackle informality? Well, the first thing is that high informality necessarily implies widespread tax avoidance. And low and middle income countries, they battle and wrestle with the need of building fiscal capacity. So that alone is a big obstacle to development because it hinders also the provision of public goods and so on. Also, informality, very importantly, can lead to substantial misallocation of resources because informality is mostly concentrated in low and in small firms, low productivity firms. That means that they have a cost advantage relative to the formalized sector to bigger, more productive firms. So I found this quote in the report that I found very interesting because it kind of exemplifies what I'm talking about. So government is practicing discrimination in taxation, referring to informality. There is a need for uniformity in taxation for all people under similar sector and size. And I think this is quite key when thinking about informality, because informality is effectively implying an unlevel playing field between different economic agents. Also importantly, informal workers have no job stability. If, for example, there is unemployment insurance, but also any other social protection network that is available to formal sector workers, it's not available to informal workers, which produces in itself an important social problem. However, informality can also provide flexibility for firms and workers, and that can be particularly valuable in face of adverse economic shocks. So if another lesson from the literature, and I'll mention this as we go, is that if there's a badly designed institutional framework and too costly and burdensome regulations, just kind of blindly enforcing them can also backfire in a substantial way. So in terms of definitions, just to make clear what I mean about formal and informal firms, so I'm going to talk about two margins of informality. The first one is whether firms register and become a formal business, otherwise they become informal firms. I will refer to this as the extensive margin. In Uganda, this would mean registering with the tax revenue and the business registration authority, the URSB and the URA. In many countries, these two dimensions are basically collecting one registration, but that's what it means basically to be a formally registered business. And in fact, in Uganda, in the data, these two dimensions seem to overlap almost perfectly. Otherwise, you're an informal business. Now, informal businesses can only hire informal workers. They typically don't have the legal instruments to hire formal workers. Formal firms can of course hire formal workers, but they will also hire informal workers as a way of getting around the labor legislation. So this is what I call the intensive margin of informality. In Latin America, for which we have data on this, it accounts for 40 to 44% of all informal employment in the region. So almost half of the informal employment is located in formal firms. And this is crucial. This distinction is very important when designing social policies and policies towards informality. Now, let me talk about the determinants of informality, especially focusing on firms now. Basically, there are three main levers that have been widely discussed in the literature that policymakers can use to reduce informality. The first one is to reduce the costs of formality. And this has been the focus of most policies towards formalization around the world. From what I could read in the report, that's also been a lot of the focus in Uganda. And I would further distinguish two margins within this box. The first one is reducing the costs of entering the formal sector, reducing registration costs, providing information about the benefits or how to do it in order to formalize. The second one is reducing the cost of remaining formal. That would be reducing the tax burden, consolidating taxes, as has been discussed in Uganda, reducing red tape for maintaining your firm or even paying your taxes. The second big block of policies would be those that increase the benefits of formality. For example, making credit access easier and cheaper for formalized firms, providing training tied to the formalization status, or prioritizing small formal firms in public procurement. All of this have been shown to be effective in boosting the benefits of formality. And the third and far less popular way of tackling informality is to increase the costs of informality, and that's typically done via greater enforcement of the existing laws and regulations. In Uganda, as I said, in the rest of the world, the focus has been on group one, and in particular reducing registration costs. But then again, I took these two excerpts from the report. One saying that actually individuals and businesses do not perceive immediate benefits from formalization. And I don't think this is a matter of misperception of these benefits. I think, and actually the evidence from the literature suggests that in fact, the benefits tend to be very low. On the other hand, this panel here shows that one of the main reasons why people choose to be informal in Uganda is because it allows them to operate with lower costs. And these lower costs are coming because they are avoiding all the relevant laws and regulations. So what does the literature say? Essentially, let me skip this graph for now, and I'm going to just provide you the summary in the interest of time. So basically, what the main message of the literature is that providing information about registration and even completely zeroing the monetary costs, the information costs, and all the bureaucratic requirements to formalize have very limited effect on formalization. So the previous graph will show that actually in basically almost all experimental settings, reducing these costs has zero effect on formalization. This is not to say that this is not an important policy. It might be a necessary one because this red tape is just producing losses to the economy. It actually gives room even to corruption, but it's not sufficient to produce a substantial formalization. What the main message from the literature is that the largest formalization effects, they come from interventions that reduce the costs of staying in the formal sector, consolidating tax payments, reducing the overall tax burden. These are actually quite effective in producing larger formalization effects. And a second batch of highly effective policies are those that increase the benefits of formalization. And in fact, there is very limited evidence on the combination of these two things, but when combined, they tend to be very powerful in increasing formalization, but also improving firms' performance once they formalize. One thing I would like to say, however, in terms of reducing, in particular reducing taxes, is that my experience evaluating these policies in Brazil has been that even though reduction in taxes do induce greater formalization, the effects are not strong enough to compensate the losses in revenues exactly because the government is reducing the tax burden. So the net effect in terms of formalization is positive, but the net effect in terms of overall tax revenues from that policy alone tends to be negative, reducing overall tax revenues. So that's something that the governments have to be very careful about, is how sensitive formalization will be to a given reduction in taxes. Finally, policies that increase the cost of informality have received far less attention by policymakers. There's only been a few initiatives that have been evaluated. The effects tend to be extremely strong in reducing informality. However, it also has what I call side effects, social side effects, because it produces displacement of firms. Many of these firms simply close. That could have an effect of increasing unemployment, and therefore the social costs coming from these policies can be quite substantial. In terms of the determinants of workers' decision to become formal or supply formal or informal work, the concern around the world has been that welfare programs that universally offer these benefits such as universal health coverage, but especially with conditional cash transfer programs or any means-tested program, is that they can incentivize individuals to actually shift the labor supplies to the informal sector, because that would be a way of concealing part of their income and allowing them to remain eligible to these programs.
I do welcome Ms. Sarah Kajingo, the Vice Chairperson of the Private Sector Foundation Uganda.
Good morning, ladies and gentlemen. The Honorable Minister, the Permanent Secretary, represented the Honorable Members of Parliament, past and current, development partners, chairs of boards, business executives, captains of industry, esteemed members of the private sector, good morning once again. Now, I have very few minutes, and thank you, Honorable Minister. He's rushing to another event. But I will keep my remarks brief. Now, 30 years ago, a team of business leaders convened in a modest room and conceived Private Sector Foundation, Uganda. They decided that Uganda's private sector should have one strong voice to lower the cost of doing business. They could not have imagined that 30 years later, we would grow to 346 business associations strong, a combined 3.5 million businesses, managing billions of dollars in turnover and employing millions of Ugandans. So we celebrate the impact and growth we have made, as well as the unshakable conviction that Uganda's future will be built by entrepreneurs. Today, Private Sector Foundation convenes the manufacturing sector, professional services sector, agriculture, agribusiness and forestry, energy, minerals, petroleum, oil and gas, trade and commerce, which is chaired by Director Issa Sechito, who is here in the room. And I have seen, raise your hands, members of the private sector, business executives who are in this room. Thank you so much. The other sector we represent is transport and logistics, tourism and hospitality, culture and creatives, construction and real estate, financial services, and the corporate bodies, including telecoms and banks. Our board is uniquely structured. It's one of the few boards in the country that's not remunerated. So the work we do at our pleasure, because leadership grows through the sectors of the private sector, various sectors, and we are happy with what we do in dealing with the issues in those 13 sectors. When PSFE was founded in 1995, Uganda's GDP was $5.8 billion. Today, it stands at $61.3 billion, a tenfold increase in nominal terms, and we convene here today to strengthen formalization under the NDP4 and chart a credible path toward the tenfold growth by 2040. This journey wasn't a coincidence. It happened credit to government support and the private sector who invested bravely, created jobs relentlessly. Thank you so much for your innovation and courage of all of you Ugandan companies in this room and all of you watching us for refusing to be limited by borders or high interest rates. We extend our gratitude to government and especially to the Ministry of Finance for your open door policy and for adopting a raft of measures that we propose every financial year. This financial year, you adopted 82% of our proposals, including the increase in allocation to domestic areas from shillings 200 billion to 1.4 trillion shillings. And domestic areas had been crippling companies. We had pushed for extinguishing of the domestic areas within 2 years, but we are promised 3 to 4 years, and that's a good move. Thank you so much. Tax relief for startups, we think that the threshold could be raised, but that's a conversation we shall have, as well as recapitalization of UDB. Access remains a challenge to especially SMEs, but we'll have that engagement. We also extend commendation to government for infrastructure development and maintenance of stability for 40 years, without which the private sector would not have thrived. We, Private Sector Foundation, on behalf of the private sector of Uganda, co-implement a number of projects for the last 30 years with the government, including GROW, which is funded by the World Bank to a tune of $217 million, PSFU handles $70 million, which is the component around business finance. And we do not have the architecture, and so we partnered with a number of banks, and they're doing well, which means now that the impact is that more women are getting formalized, more businesses are registered, more women are banked, and we have those details. And in that respect, it's important that we harness technologies, harness artificial intelligence, afford the young people the opportunity to dive in, learn, make mistakes, learn from the mistakes, refine, and scale. And with that, I'll conclude my remarks to enable the Honorable Minister deliver his, and I thank you very much for listening to me. But I also bring you good tidings from the Chair of Private Sector Foundation, Mr. Humphrey Nzey, the board, and thank you so much for turning up for this engagement, and I thank you once again, Minister of Finance, for convening it.
Distinguished participants, ladies and gentlemen, good morning to you all. It's my pleasure to welcome you all to this annual review of the private sector development program in its 5th and final year of implementation under the 3rd National Development Plan. I want to apologize for coming late. I was held in Makerere. There was a function by Professor Barnabas Nawangwe, which held me a little bit. But I want to thank Kagwa and the team for adjusting the program in order not to lose time. I want to extend special welcome from my colleagues, ministers, heads of government departments, agencies, and local governments, representatives of our partners, private sector, civil society. Together, we have walked this journey over the past 5 years, and today, we once again pursue to reflect, assess, and chart the way forward. The Private Sector Development Program under NDP 3, despite the challenges highlighted by the Permanent Secretary and Secretary of the Treasury, including the COVID-19 pandemic and global economic disruptions, Uganda has registered significant success under the NDP 3, out of which include the following. Under the able leadership of the NRM government, led by President Yoweri Kaguta Museveni, our economy has rebounded strongly and is now recognized internationally as one of the fastest growing in the world, with projections placing Uganda among the very top by 2031. Macroeconomic indicators reflect resilience and stability, making Uganda increasingly attractive to investors. The key aspirations in the NRM manifesto that were prominent in the private sector development program, PEAP, were 1, access to affordable credit, 2, the parish development model, and development of industrial parks. These were prioritized under the private sector development program interventions, as will be demonstrated during this review. But briefly, financing to the private sector has expanded through the Uganda Development Bank capitalization, which exceeded Uganda shillings 1.5 trillion over the past 5 years, through a MYOGA worth Uganda shillings 500 billion and Uganda shillings 3.26 trillion through the parish development model, reaching millions of beneficiaries, deepening financial inclusion and wealth creation. Coordination across government has improved, with institutions jointly identifying common results and financing priorities each year. This is a welcome step, and I congratulate all colleagues who have contributed to this progress.
Ladies and gentlemen, our Honorable Minister is now going to officially launch the PSDP app, that is the Program Implementation Action Plan, and he will do so by way of signing. Please do clap for the Honorable Minister as he launches the Private Sector Development Program Implementation Action Plan. Mr. Mwanje has already taken us through what that entails, and now it is incumbent upon us to actually do.
That you don't just manufacture a product and simply move. And UNBS is in this room. The Ministry of Trade is very well represented by commissioners and the agencies. Dr. Ntambi is here, Mr. Makula, Commissioner Chiria. We have had these engagements with UNBS in respect to delays, but at Private Sector Foundation, our approach is not belligerent. We study, we move in and strengthen linkages. And recently, and a commissioner from Ministry, Commissioner Patrick, if you'd like to speak on the startup policy, which you've partnered with Private Sector Foundation to define what a startup is. You've had a participant, a member of the business community say, how do you grade formalized companies? One that started yesterday, the other 3 years ago. What is the startup? What is that policy driving toward?
Startups are basically enterprises that are technologically driven, that are applying the IT applications. Here we are talking of artificial intelligence systems and practices. So we are looking at those businesses that are at least 6 months old, but less than 10 years. And these are businesses that need a lot of technologies, they attract a lot of funding, they need venture capitalists. And they need also incentives. The situation that we are talking about, whereby a company starts and then tomorrow it is being taxed, this doesn't work, because startups need some period to really develop. Unfortunately, His Excellency the President has already given that. I think they were given 3 years tax holidays. So for all the youth that can have ideas that can be materialized, and with the Business Development Services framework that has come on board, we encourage them to enroll, and then they can continue doing their businesses.
We are working very hard representing Uganda at the EAC. At the EAC, we have harmonized standards. and we have harmonized the process of implementing those standards, certification, testing, calibration, and the works. Now, it is a job to make sure that all of us are doing the same thing. Now, we have, as you've mentioned, undefined bureaucracy that's going on at the South Sudan border. The bureaus of standards are together and they understand the issue of standards. And it's a work in progress right now, but we are trying to get the team in South Sudan to agree to do what we have all agreed at the ESC. The standard is the same, the certification is the same. We went through a lot, and we thank the support of the members in the northern region, because we really worked to make sure that we could prove that the products coming from there were meeting the standards. So it's a work in progress, and we shall continue to do that within the ESC. But as has been mentioned, we have the regional offices that have the labs in Gulu, in Mbale, and in Bara. Our records show that majority of what we are doing as far as added value is concerned is very much central located. We're talking about Kampala, Wakiso, and the neighboring districts, including Mpigi. A lot of what we are doing is central. And as government, we need to see how we can push, because we've made the effort to put these services in the region, but a lot of the work is still at the central. In fact, a lot of raw produce comes from the region to be added value in the central. How can we change that flow and start adding value from within the regions? That would be useful. We, as part of the benefits that have been mentioned, and I guess with government, I think what is lacking is also how we can get information to everybody. There are many things we are doing, but the information is not there. It is very easy for us to support all levels of businesses when they are associated. As has been mentioned by the Ministry of Trade, there's a lot of support towards SACCOs, cooperatives, associations. It's the best way for government to help people. It's very hard to come as an individual, very small, micro or small, trying to get support from these entities. But when you come as associations, the hope of growth is there very much. And UNBS is developing a personnel certification scheme, which we are going to work with first with associations, because we need to see this work, and private sector is agreeing to do self-regulation through the associations. In that scheme, we shall have the private sector provide us with 10, 20 people who can be certified as auditors, so that they can do the initial audit that UNBS is doing. It's becoming very difficult for us to be everywhere all the time, but with the private sector associations, they can do the audits, the initial audits, and then upload onto our systems, so that we will come for the surveillance as and when we are able to verify what is happening. That's part of what we hope to reduce the turnaround time. Thank you.
We all are aware that in this country, people will wake up one day and start businesses because either I had a dream, or I saw my uncle do it, my mother said you can do this, but you don't go to the nitty-gritties of, can I do it? Is it viable? And those are the questions. That's why you'd find, if maybe like the gentleman, the example you gave of the guy who's trying to, who realized that the Irish potatoes in Uganda have got high sugar content. So this could have been actually feasibility, research-based work to do prior before engaging what is done. But again, it goes back to information flow on whatever you're looking at in a value chain. Going back to the question on how do we involve the different players, the startups and the likes. As Dr. defined it very well, there are two things here, Chair and colleagues. Startups, by default, they claim it's ICT driven. That's one component. But big startups that have made money, abnormal money in the world today, some of them are in the biotech. So it's not just ICT driven, and that's why you'd find, even if we went back to look at which are those startups that actually qualify, because that's a bit of definition, these guys are supposed to be disruptive. Honestly, if you're going to start roasting peanuts, and you come and you tell me, Commissioner, I have a startup, you're just starting a business and you are going into value addition of groundnuts. So the IT technology facet of it is not there. But it goes back to policy, Madam Chair. Currently, the startup policy is going to be launched very soon. We are also reviewing the National MSME Policy of 2015, the National Standards and Quality Policy of 2012. The BDS policy is going to be finalized by close of this financial year. All the issues that are being raised here, Madam Chair, some of them take a policy dimension. UNBS is tasked by government to collect NTR. So for them to work up and say, now we are going to be offering free testing services, they'll have to explain that, why they're doing that, yet they're supposed to collect NTR. That's why diversifying where support can actually go. Back, for example, to the Ministry of Trade, where we say, we've got a support fund to support MSMEs, handhold them in that process of pre-certification to be ready. Those are policy issues. And we are going to address these issues. So, incentives. Someone raised the issue of why is it the informality report does not address the carrot and stick approach? That was on point. So these initiatives of giving you BDS support across board, where you're not supposed to pay for pro bono, because we are civil servants, we are paid to do this. It's part of the incentive we can give. I think in the afternoon, Chair, we'll offer more insight on what we can actually present to the sector as Ministry of Trade. I submit.
Thank you, Commissioner.
Your tables, we try to understand the nature, the characteristics. We look at the drivers. In the previous discussion, I've been hearing of what drives informality, and then we try to also, examine the strategies that, how they've worked. So, as you know, as the theme for this workshop, we are looking into the NDP4, okay? So we already know that in the NDP3, the contribution of the informal sector was about 51%, and by the end of the 5 years, the NDP3 had targeted to reduce that to 45%, about 6%. But by the time we finished the NDP3 period, and because we had COVID inside there, the contribution of the informal sector was about 55%. Now in the NDP4 period, we've given ourselves even a huge task, a much higher task, to reduce informality by about 9 points, from 55% to 46%. Now, what does this mean in the future as we move into the NDP4 period? It means that we have to think differently, we have to do things differently, we have to collaborate, we have to think through ways, because we've given ourselves even a much higher task. And you know, the NDP4 period has come with even a bigger challenge. We've been challenged as managers of the economy to grow this economy 10 times. Now, these are some of the indicators, but when you look at the sectors for which we've prioritized to grow our economy tenfold, they are also, informality is also hiding there. If you look at agriculture, farming, forestry, mining, accommodation, the hotel, the tourism, accommodation also speaks to tourism. And the key question you should be asking yourself, are we going to achieve our tenfold targets amid this high level of informality? We've given ourselves quite stiff targets, and they need us to improve the productivity of the key sectors that we've prioritized.
My brother, this business of the formal people acting informal is something very, very bad. I'll tell you that the collective work between KCCA, URA, and the Registration Services Bureau, if we had to achieve 100%, 50% of that retired because of that intervention. Because it is almost a crime. If you get a TIN number, you get a certificate of registration, and you are now formal, just know that any problem that comes to the Uganda Revenue Authority, they are going to knock at your doors first. And this scares away so many people. If you go to Chikubu, there are small businesses that have registered. There are big billion business worth of that are not registered, and they are getting richer and richer. Not even IFRIS can trace them. And the only thing is, Mr. Sechito, when you want problems, just go and formalize.
Mr. Sechito.
Yes.
Are you trying to say that
Yes.
formalization
Formalization
is equal to taxation in this country?
Formalization is good. You can submit if there is a tendering process. You can easily acquire loans. You can go for any bidding process anywhere as long as you have a certificate. But if there is any shortfall in the Uganda Revenue Authority is when you know you committed an offense. I am assuring you recently, the Uganda Revenue Authority that is formal went out to act informally. They are people of withholding tax exemption. A circular came out, not even the public domain. The Commissioner General said now from today, the self-assessment scheme, when you are demanding URA 15 million and URA is demanding you 50 million, this business of now balancing yourselves, and they take yours so that yours can remain yours, was suspended informally. Now, if a body as scientific and as big as URA is acting informally,
Someone said elite informality.
What did you want to happen? And I was worried to talk about one thing, but the person in the Uganda register, the first gentleman, solved my game when he highlighted the politician. Ladies and gentlemen, if you want to know the dangers of informality, go to KCCA, ask them how the vendors, the motorcycle riders, or not even informal but illegal, have blocked all the registered companies for which the URSB registered. We have TIN numbers, we have trading licenses, we have certificate of incorporation, and we cannot sell even an item. Government is busy promoting the informal street vendors as against the shop owners and the market dwellers who are formally registered. You now just imagine, if government wants us to reduce the informal sector, how do you even reason that somebody selling the same items as people inside the shop should informally come on my gateway, vend, and they have the protection of the KCCA, the government, the ministers, the Lord Mayor, and they are all acting informally, yet they want us to formalize.
Informality is about you're a productive person in terms of your trading, you're contributing to GDP, a person, an individual or business, but you're not registered and you're not contributing to taxes. Now, the reason why this is important, very few, you will agree with me that very few people are very happy to pay taxes. So the broader, the more people we register and we have on our register, tax register, then everyone can pay a small amount that is due to them. If we just stay with a few registered taxpayers, we can't keep pressing the same few people. We need to broaden. Let all of us contribute our due amount. That is where we come from, and we need to get all these people. There are many people who contribute to the economy, but are not formally registered. So in a way, taxation has to be formal. Now, going straight to your question of what can we do then as URA to incentivize. URA, when you go back to the mandate of URA, we administer tax policy. We work jointly with the Ministry of Finance. The first thing we can do is develop policies that are targeted to small or informal, small businesses that are just starting up. And this we saw in the previous income tax amendment, where newly registered businesses were given an exemption for 3 years. That means when you've just registered a business, yes, register, your capital base is less than 500 million, you don't have to pay any taxes for 3 full years.
I would like to use the word you used, also to my fellow director here, about using the structures that are existing. I have had the opportunity to listen into this kind of program when I was still part of the DPA and PSD. And my first question is, why do we keep discussing these same things year on year? Isn't it? For people who have been in these rooms, this is the same thing. Mr. Sechito, you would agree. Ms. Nasaka, you would agree. These are not new topics. Are we saying that the brains that sit under these programs actually cannot think further than this? Or are we as a nation failing? Number 2, Uganda Revenue Authority, I would like to let you know, gentlemen and ladies, that they are at the end of the chain. They have never been in the middle. And never in the lead. They should not. And looking at PSD today and what we want to do, and the programs now under the program-based planning, we need to be intentional, like he said.
If we want to formalize the informality well, let us do it ourselves first. Let it start from our homes. Let it start from our farms.
For better or for worse, we must address those negative issues related to informality. And on the part of URSB, there are 2 issues we are going to continue to look at. One is incentives. How do we link registration to the benefits that accrue with registration? How do you use procurement policy? How do you use the government bag to be able to incentivize?
Formalization is good. I have helped informal people to become formal. I have seen small companies, I have seen them become big. I've worked with importers, they have become manufacturers, they have become kwagalana. So I would like to encourage you, it's a graduation model. Kindly don't run away from that. There is everything to benefit.
Yeah, thank you very much. We have had a real, very vibrant day, and I want to say that we have tried to capture what has been discussed, and we have all been active. So basically, I need to summarize. So we had the morning session with the welcome and opening remarks by the ministers and the PSST, the big dignitaries that were in the house. And they all echoed the importance of this meeting. So we are here to review the performance of the PSD program over the past 5 years, but basically we are reviewing the past financial year 24-25, which we've ably discussed as we plan to engage or embark on NDP 4. The Honorable Minister highlighted the key priorities ahead, which included, among others, the cheaper and accessible credit, financial inclusion, managing areas, private sector capacity and performance, strengthening associations, increasing domestic revenues, and formalization of businesses. And all these have been ably discussed. I'm sure that they are all detailed in the PIAPs, which has been shared The document is big. Our duty is to internalize it and continue working together to have them actualized. We received a key note address from Professor Gabriel, who emphasized that while informality is a reality of Uganda's economy, it requires a practical and balanced policy action to be addressed. Again, this has just been ably discussed by the last panel, and I think we have to work together to make sure that we can achieve it. In my view, as we are struggling to pick up the formalization process, the Asian tigers picked this with a view of export-oriented businesses. Believe me, if you want to do export business, there is no way you can engage in export business when you are an informal business. Because you will need to be paid, they'll ask you a bank account, they'll ask the directors of the companies. You are there, some of you who are in export business. So for me, I think as we are preparing ourselves to participate in the African Continental Free Trade Area, we know the challenges are ahead, but without a formal business, it becomes a challenge. And we have to start small as we go along. It's a journey that we have to go through.
Now I am trade and industry. I'm going to be verbatim. Honorable ministers, colleagues, the permanent secretary, secretary is present, secretary treasury, heads of institutions here present, representative of development partners, civil society organization, and private sector, ladies and gentlemen. Today has been an insightful day as we listen from the wide range of stakeholders, from policymakers, the implementers, the academia, the recipients of the private sector intervention, the private sector players, and it's my pleasure to thank you all for your interactive participation during this 5th and final annual review of the private sector development program under the 3rd National Development Plan. We have received the wrap-up of this activity, which detailed the technical undertakings that each participant is responsible for in order to position the private sector in the steering role of the Ugandan economic growth and development. This conference brought to light research findings and various perspectives and recommendations towards tangible progress in enhancing the private sector competitiveness. I will reiterate that the challenges that affected the NDP3 have been addressed, and we ought to commit to the results contained in the NDP4 PAPs, which were launched this morning by the Minister of Finance. This will call for close alignment of our budgets and annual work plans to the PAP if our consultations are to be meaningful. The Secretariat for the PSD program will coordinate the members, ministry departments and agencies, and the private sector players to ensure that the undertakings generated here today are prioritized in subsequent budget cycle. The private sector engagement strategy that was mentioned in the Honorable Minister of State of Finance, Planning and Economic indicated the interventions required in the various programs to create an enabling environment for the private sector to engage in the refugee host districts. Similarly, we received the perspectives on how to address informality, and this will require. As I conclude, I extend heartfelt gratitude to you all for your participation in this PSD program, Secretariat for rallying us. Let us continue supporting the team whenever they reach out to us towards a competitive private sector-led economy. For God and my country, I thank you. I declare this program of today closed. Thank you.